Hey everybody, good afternoon. It's Breakout Bag Lunch and today is January 8th, 2026. Fortunately, this is my second time recording. I'm not sure what happened last time I tried recording, but I got to the end of what I want to say and found out that nothing was actually saved. So, let's try this again. All right. Today we only traded ES. We have one losing trade, and in this sense, this video is different from the others I've recorded because I actually have a trade that I put on that is active as we speak. Right now it's in the red, but we'll see how it goes. I have my profit target up here and my stop down here. I only have ES on the screen right now because this is the only futures contract I traded today. And yeah, we're just going to do a review, retrospective, and that'll be it. Let's get into it. Okay. The first trade I took today was based on a break and retest, or just a bearish break of the 5-minute opening range on ES in the beginning of the New York session, as you can see on the 1-minute chart. Once he had this break and we had this correction, I decided to get into shorts here. My target was near this low of day, which we didn't reach. We made another move lower, but this was a lower high, and so I exited this trade at a loss and covered my short. And the next trade I took was based on this break of this supply zone. We had a bullish break, and so I decided to go long. And like I said, I'm still in the red on this trade. We'll see if things turn around. But just looking back at the price action for today, if we draw a Fibonacci retracement, I think this area or this area would have been better entries because we got to move lower and then a pop back up, move lower and pop back up. Now, my main takeaway from the trading for today is that I'm noticing a pattern with trading the first 30 minutes or so of the New York session, and that is that it's not really good to hold on to trades for a long time during that time frame when the market is just opening, just because there's just so much volatility. A lot of times a winning trade can easily become a losing trade because at 1 minute it could be bullish price action and then another minute it could be bearish price action. For the first trade I took, for example, at one point I was up over $400, but I gave it all back. And so I think that if a trade that is put on at the beginning of a trading session is not aligned with a trend or a setup on a higher time frame, then it's better just to take quick profits and scalp rather than hold on to the trade for too long, because winners can become losers very quickly during that volatile first 30 minutes or so of trading. Now, if we look at the trend on the higher time frames, for example, on 1 hour time frame, And for a higher probability trade, or say a stronger trade just based on a higher time frame, you want to look for like a break below here for a short entry, or a break above this level for a long entry. But since we're in this in-between area, it probably would have been better to just focus more on like the scalps. And then of course, yeah, entry's important, which I touched on. I'm gonna let you guys know how this trade ends up playing out in the comments. In terms of my plans, I'm still going to try to take another shot at the Topstep trading combine next week. I'm going to do some more back testing and sim trading over the weekend with on demand on Thinkorswim, and I might make that another video. I'm trying to think if there's anything else I wanted to say, but I think that's it. As always, if you have any comments or suggestions, please let me know. But if not, have a wonderful trading day, and I'll talk to you all tomorrow. Bye.